Hello and welcome to Pro Trader Strategies Market Commentary for Friday, December the 28th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data. Across the pond, we got German preliminary CPI, which is Consumer Price Index, came in at 0.1%, expected to be 0.3%, a little bit lower than expected there. This is a theme we've been seeing the last couple of weeks as a basic global slowdown, or at least not as robust as we were expecting. And then we got Spanish flash CPI, Consumer Price Index, came in at 1.2%, expected to be 1.6%. That is lower than expected, but that is also an indicator of inflation. We're not really seeing that. So if we're starting to see a little bit of a slowdown, not having inflation is a good thing because that would cause us to kind of go into a bit of a recession. All right, and then we have here in the United States, Chicago PMI, which came in at 65.4, expected to be 61.4, better than expected there, which is nice to see because a lot of these PMI numbers and the manufacturing indexes have been coming in a lot lower than expected. The Chicago PMI being better than expected is a silver lining. Then we got pending home sales coming in at negative 0.7%. Wouldn't really expect to see a lot of home sales in the wintertime. That's usually where we see the lull. But having said that, it came in much lower than expected. It was expected to be 0.9%. We got a negative 0.7%. So a big, huge miss there. And remember, last month's was a big miss as well. These interest rate increases are really going to start putting a crimp on the consumer buying homes. As they've been shopping, they're seeing the value or the type of house that they can afford to buy get smaller, and it really puts them back on the sidelines kind of waiting. And then we got natural gas storages coming in at negative 49 billion cubic feet, expected to be a drawdown of 50 billion cubic feet. That's fine, in line with expectations there. And then we finally got crude oil inventories expected to be a drawdown of 2.9 million barrels. Remember, this was a holiday season. We should have seen a lot of people out driving around and using that gas. Didn't really see that demand happening because we saw inventories rise. They did not move at all. So no drawdown there. That means build. That would cause crude oil to come off a little bit, as we're seeing here. It's up on the day, but we are well off the highs since that economic data point came out. So crude oil really showing consistently that we're just not getting that demand going. All right, so crude oil higher on the day, but definitely off the highs of the day. Gold actually starting to look a little bit top heavy here. I think that it's going to roll over. I'll talk about a trade that I put on for this, but I think it's just overdone to the upside. I don't see it traveling as high as this 1300 area or this value area high. I think it's just actually overextended already, and we're going to kind of roll over back down to the point of control as the equities start rebounding off of this latest sell-off. Bonds coming off a little bit, but pretty much unchanged on the day as it's really trying to wait and see what the equities do in order to make its next move. It's pricing in the fact that the FOMC has increased interest rates too far and that they're going to have to start cutting interest rates, which is why the bonds are starting to move higher. I think that they're just going to start pricing in that we are at or near where the Fed wants us to be, and they aren't going to raise interest rates in 2019. All right, VIX unchanged for the most part. It's also kind of a wait and see. We've had these big couple of days moving higher. Today, it is pretty quiet for a Friday, not making any major moves. As you can see with the Dow Jones Industrial Average, it came up and tested the Fibonacci extension. That is going to act as resistance. Now, I've talked about this several times. I'd like to see it get above that, and above the 50 Fibonacci for the 3-year. That would get us back into that value area, if you will. and start migrating back to the point of control, which is what I've been under that type of market analysis. I think it's going to settle down in and around the point of control for at least a couple of months. That being said, we haven't gotten there yet, and we're trying to peel through some of these layers on the Fibonacci, which are acting as support and resistance. They're lining up quite nicely. You can see here, a settlement above the Fibonacci extension would obviously be a good thing for the NASDAQ. It's in negative territory, but at any given moment, we've seen positive NASDAQ and back into the negative, as well as the mini S&P here. And it's got to get through that same Fibonacci level. So we need a bit of a kick in the pants to get up and above there, and I think that we will resume back to that point of control. Way overextended, as you can see here on the E-mini S&Ps. There's just a lot of opportunity down here, I think, and that's why I've been stepping in lately. You can see with the 30-minute chart on the E-mini S&Ps, economic data, we really kind of slammed down. We're recovering from that as the weaker hands get out of those short positions and settling in and around this area right now. That's not to say that we aren't going to break out. I would like to see a breakout above this Fibonacci extension to get us back into a more comfortable level for investors to start coming back in. The retail investor, I think, is really on the sidelines, despite the fact that maybe every financial advisor is out there trying to get them to dollar cost average at this point, which might be the right opportunity. So let's talk about a couple of trades that I've added on with this GDX, which is the gold miners. That is a play on gold. I don't really want to go out and trade the gold futures, but I'll do the gold miners in this environment. And went into the February, sold the 22.5 calls in there because I'm a little bit bearish, just like I talked about. I think gold's going to roll over. That would make the gold miners roll over as well, and sold those for 45 cents. Obviously looking for that to come down to the value area low and test that as the overall equities start to recover here. And with IBM is another trade that I added, but I wanted to add some long deltas to go along with my overall stock assumption that we are overextended and we're going to start curling back up here. And so I decided to go into the January and sold the 100 puts in there for 54 cents. Obviously, those 100 puts are well below the 52-week low. And if you go back in time, this is basically at the area where, you've heard me talk about I started trading in college. IBM was one of those that I started trading in college, and it brings back a lot of memories because these were the calls and puts that I was trading constantly in and around my IBM position, and that was the 100 calls or the 100 puts. Pick the puts today because we're above that. That'd be a nice place to pick up IBM, I believe, anyway. So that's about it for today. Yesterday's webinar was a great one on the long call calendar, on the poor man's covered call. And that is a great situation for a newer trader to get involved in options because it's synthetically acting like the actual stock with a covered call strategy. Okay, so check that out. It's actually more of a collar because we've limited our downside risk. So check that one out. Find out the rules of how to set that up to be more successful going forward at protraderstrategies.com. That's all I got for you, other than if you can't take that, take it easy.